Morning, Market Chameleon. Sorry for the late start. How you doing, Dima?
Good morning, Will. How are you?
Good. Let me get up the disclaimer. We'll get going with that.
So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer questions and provide you with guidance. There's the disclaimer.
Excellent.
And
so what are you seeing this morning, my friend?
So I think, we'll continue on the Q&A. We've been getting some good questions from the community. And you guys, if you're first joining us for the first time, you have a question, it could be a Market Chameleon tool, something you've seen trading, option strategy, data, analytic, something you experienced you didn't expect. Put that question in. It's going to benefit all of us, right? Because we could discuss it, take a look at it, share those ideas. Maybe there's an error you did or something that you saw unusual we could take a look at today. Two ways to do it. You can put your question in the chat. Will's monitoring the chat. He'll read it back to me, or Will's also putting a link to the Zoom. You click on that onto that link. It takes you over to Zoom. You raise your hand. You could ask that question directly. You don't have to turn on your video camera, but you could ask a question live. So with that, while we're waiting for questions to queue up, I'll just start taking a look at what's going on this morning. In the pre-market, I have some other questions that I get, through chats and emails that I could default to as we're waiting for those questions to queue up. So Perfect. Sounds good. I'm going to share my screen. And this is the pre-market report. These are stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 164 stocks made our percentage gainers list, 64 in the percentage decliners list. So right now, from that perspective, we look like more bullish bias for the opening. Let's take a look at the S&P 500 stocks to see if we're seeing a similar situation there. So I'm coming up here where the filters are, and I'm going to drop this filter in ETF, select SPY. So these are stocks that are components of the SPY ETF or S&P 500 ETF. And here we see, after we filter, there are 25 stocks that made our percentage gainers list, 8 on a percentage decliners list. So not a huge amount of stocks, but it's nevertheless, it favors more of a bullish bias at the open. All right, so that was really quickly just kind of going over what's going on here in a pre-market. If there are no questions yet, I'll kind of just default to some of the things that I was going to cover, and then we can take any questions as they come along.
We had a question from a new chameleon who's asking about mRNA earnings. I don't know if you can take a look at it. It looks like they just announced.
Okay.
No specifics. That was it.
All right. So I just see it's down 14%, but really, like, maybe if you guys could be more specific about the questions, because, throwing out symbols is, that means I have to go there, look at the stock and start analyzing it and looking through things to find something for you while everybody's waiting. So maybe make those questions more specific, not like Jim Cramer where you throw out a symbol and I hit buy, sell. It's kind of like, we want to learn something, right? If you want to learn something, the more specific you are about the question, the better. Throwing out a symbol, I could sit here while you guys are watching me and start analyzing, the mRNA earnings and historical stock moves or whatever.
Well, I have a question. What is the drift after earnings been in the past for this, now that I'm looking at it?
Okay, so you're talking about stock patterns here?
Yeah, stock patterns after earnings.
All right. So you could see here, this is how the stock tended to behave around earnings. So you see here, 55% of the time it gapped lower, 45% higher. On average, gained 2.6%. But we could see here that the average gap up or down 5.6%. Biggest move 22.4%. prior to, well, today's isn't quite that high, but it's definitely above the average. But Will, did you have anything specific you wanted to, besides just
Yeah, I just
the
wanted to
more
see that.
specific it
Nothing
is, the
specific
better.
pops
Yeah.
up.
Okay. All right. I mean, the more general it is, the more, then it's a general question will get a general answer. If you have a very specific one, it's even better, because I could just like narrow down on it. Especially if you're seeing something maybe like, hey, like, what is this? Can you explain this? What is this trade? That I think is more beneficial than just kind of, thrown out symbols and stuff. You're just going to kind of get like,
Yeah. Actually, Jake now renamed you D Kramer.
yeah, decrease. Yeah, so something like it, because you want to learn, right? Let's try
Yeah,
to
no,
learn.
definitely.
And if you want to, if you want to just talk about symbols, you have so many people doing that anyway. Throwing it out, like you could go anywhere. So let's try to learn something new. Get it. The best thing I could give you is maybe sharing my experience and knowledge that I've learned. From my years of experience trading on the floors of the exchange, working for big market making firms, building our own algorithms, to do electronic market making. Like that's your biggest benefit to query those types of questions. Throwing out the symbol, I could talk about it, but what are you going to learn from it? So one of the things I think that is also important, some of the things I see people do, unless there's other questions, I'll just kind of fall back to, some of the things that I've seen people do that I think are mistakes.
Perfect.
So I'll get something like this. I tried 4 trades, lost on all of them. This doesn't work, right? Tried 4, lost all trade, lost on all. Doesn't work, I give up. Or sometimes I tried 1 trade, it doesn't work. And this is like a common thing, like, all of a sudden, like, I'm hearing it more, not a ton of times, but I do hear it a little bit more often, like, that some people just get into it as beginners. And the first thing they do is they try to do like 4 trades, doesn't work, or 1 trade, it doesn't work, and they're out. And it's not like that's not really trading, but like, I think that the importance people don't give is the break even. Break even is very important. To know how to trade and break even is extremely important. If you're going to be a long-term trader, you need this here break even is, how I'll put a star. This here is extremely important to all traders, because trading, a novice thinks that he has to be right? So what is an amateur, novice? He thinks he has to be correct, right? He has to be right. He has to be right on the direction of the market or the implied volatility. That's what they think they have to do. They have to be correct 90% of the time, 70% of the time, and that's not how it works. Breaking even is extremely important to do, because most of my trades are for break even on purpose. Okay. And most of my trades that I put in, I don't get filled. If you're a professional trader, most of what you're putting in there, you're probably not getting filled. Market makers don't get filled on every quote that they put out there, and traders don't always get filled on every trade. So, but why is break even important? And you're trading for break even to learn what's going on, how things are acting, where there are opportunities and where there are not opportunities, and where you should be starting to bet more and starting to bet less. Okay. So think of it like, you ever see a person who counted cards, playing blackjack, right? And they count cards. So really, a lot of times they're just counting the cards, trying to break even, not lose a lot. They know they're going to give a little bit up. And the whole idea is because as they're doing it, as they're doing it, they know when to start increasing their bets, right? That's how you're studying the board. You're putting out, like, is this strategy working this stock? Is that, how do you learn, how do you learn how to do good trades in Tesla? Well, that means you have to start trading it and learning how it behaves. How do the implied volatilities behave? How does the skew behave? How does am I better off doing just calls, puts, straddles, strangles, butterflies, vertical? So you have to kind of learn there. And to learn it, you're trying to break even or close to break even, because that's part of the game. Okay. So if you don't understand this, if this isn't your in your wheelhouse, if you're not trying to break even most of the time doing trades, you're doing it wrong, because then you're just trying to win every time, and that's not how it works. Like, so I'll give you an example. When you go play, even I like football right now, we're in football season. So when you go out, a lot of times, you're doing plays trying to figure out where the weaknesses are of the other team and what works better, what doesn't work. And then you start doing more of what works and less of what doesn't work, right? So in the beginning, you don't see, you're not just going out there Hail Marys every play, right? That's not the point of it. You're not Hail Mary and trying to score every time you have, the ball. What you're trying to do is figure out, how do I make more gains than losses, and where do I pivot to, and to pivot and to learn, you have to have losses, right? You have to learn that way. And break even in trading is it's very important to know how to break even. And it's gonna be recognizing, like, okay, I could do this trade, it's 50-50. If I get filled here, I'm not hurting myself too much. And really, my goal here is to break even and learn. Okay. And it's how you manage your risk, your order placement, and you have to have that kind of mentality that a lot of times you want to be trading for break even. Okay. To learn and to know when to recognize the true opportunities, you have to be in it trading, right? To recognize that you're going to see it. You're not only are you going to see it, you're going to feel it. Okay. You're going to start feeling it, where you're right, and when you're doing something that's working, and when you're not doing it. And you'll start to understand, where do I increase my bets? Where can I take more risk, and where can I just trying to break even there? So the break even, very important. Wanted to mention it because a lot of times people who start out want immediate success on every trade, and that's not how it works. That's not trading, unless you already have a lot of experience to fall back into. Then you kind of, are doing things that are profitable, but doing other things that you're experimenting that are break even. Is that helpful? Any questions on that?
Let us know if you have any questions, chameleons. None have popped up yet.
So break even, very important, because once you break even, you're just doing small tweaks, right? Small tweaks to get you over that hump. So I wanted to mention it, especially, like, when I hear this, I'm like, okay, you're not trading. Okay. You did 4 trades. And the other thing is, when you're using tools, right? When you're using tools. So here, I told you, I'm going to just write this again. These are the all these, right? Education, research, risk management, okay, and execution. You need all this to be successful trader. You need all this and all this to work together. Okay, so you can't take one and not the others. It has to work together. Most people jump to execution. What I mean is they They go in there, they open an account. Once you open a brokerage account, you get a user interface with charts and prices, and you start trading. That's just execution. That means you skipped all this, right? You went right to here, which is the last piece. But what do I mean by working together? Like, why wouldn't this just work alone? Like, why can't I just skip all this and just work it alone? So imagine if you have a car, right? And what I mean by all the tools and pieces working together is if you have a car, you could turn on the engine, you could press on the gas pedal, but if you take your hands off the wheel and put them behind your head like this and start driving, you're not using everything together, right? You're not steering and driving and you're going to crash, right? Or if for example, you're driving, you're using the steering wheel, you're using the pedal, but you decide, I'm not going to pay attention to the red and green lights, and you just drive right through the traffic lights, you're going to crash, right? If you're not using the right side of the road, and you're using the steering wheel, if you're not using everything the way, together and at the right moments, knowing when to use things at the right moments, you're going to crash. Okay. So all this, you can't be skipping this, guys. Okay. You want to skip it, you're going to crash, right? And there's no way around. Okay. There's no way around it. There's no way to drive a car and say, I'm not going to pay attention to those red and green lights. There's no way to drive a car and say, I'm going to go on the wrong side of the road. There's no way without getting hurt. There's no way to drive the car and say, well, I'm just going to press the gas pedal and ignore the steering wheel. You can't do it. Okay. You guys are going to eventually it's just not going to work, and you're going to figure that out. Now you could get lucky, and buy something and it goes up or whatever, just like you could drive a car and go through red lights and get lucky and not get hit. But in the long term, there's no way to skip these things. You need all of these pieces to work together. And sometimes, I get people saying, well, I use this tool and, the statistics said this statistics say that. And it's also known how to use the tools at the right time and when it's appropriate. And I'll give you an example. Like, let's say you have a stat and it looks good. And let's just say, I don't know, if I could use football, people want me to stop using football, stop using those analogies. But let's just say it's fourth down and inches, right? Fourth down and inches. So you have, if you don't get those inches, the other team gets the ball, right? And if you get those inches, then you got the ball. And you have to decide fourth down in inches. And you could take a look at your stats and say, well, when it's fourth down in inches, the last 10 times we got the first down. So statistically, that looks great, right? Like, yeah, well, I don't know what's going to happen, right? But I know that the last 10 times, 100% of the time, we got the first down. So now you're looking at that stat, but is it the right moment to use it? So for example, if you're fourth down in inches and you're inches from scoring, maybe that's worth the risk. Why? Because if you miss it, then the other team takes over, but on their 1 yard line. But what if you're fourth down in inches on your own 11 yards, right? And if you're on fourth in inches on 11 yards and there's 30 seconds in the game and you're up by 7, does that statistic even make sense to apply at that moment? No, right? Because even if you're super sure I'm going to get the first down, the risk is too high, because now you're basically risking giving up the game to get those inches. So experience, it's telling you how to use the tools together appropriately and applying them at the right time, right? So some of the things you're looking at, it's knowing when is it relevant, right? Like, when should I look at this as relevant? If I'm fourth in inches, should I go for it? When you're only going to turn to that statistic when it's very relevant, right? Like when you're like, I need to make this decision let me turn to the tool to help me out. So is that making sense? Like my analogy, like why, you know, you can't just look at something and say like, oh, okay, this, like, let's say it's the beginning of the game, right? It's first down and 10, right? You got the ball. It's the beginning of the game. This is your first play, right? And in your first play, your stat says that, I don't know, you know, my that my quarterback sneak works 100% of the time, right? My quarterback sneak works 100% of the time, like historically. I did it 10 times and I did a quarterback sneak. But does that make sense to reference that statistic and that historical data at that moment? No, it's not relevant because you don't need a quarter. It doesn't do anything for you. You don't need those 2 inches or 3 inches. You see what I mean? So it's kind of like from experience and learning, that's why all this is important, starting to use things together so you know what to reference when, and how much weight to give to it. And kind of like that's what I'm trying to show you guys, because from the questions I get, I'm like, okay, you tried this, but why did you try this? Or what were you thinking at the time? So if you're, for example, if you think, if your outlook on a stock is bullish and you think it's going up, but you saw a statistics on a bear call spread and you did the opposite of what you wanted to do, and blah blah blah. So all this has to work together, right? And we're right here. This is where we are right now on the research part, right? We try to talk about this in the mornings, getting questions, but
and we have a history of videos. Don't forget those. Over 1,000.
Right. And there's no, like, in an education it's not just watching one video. It's not reading one book. A lot of it is initial education. Then you have continuing education and ongoing education, and a lot of it is coming from experience. And a lot of it is you're going to learn about different tools. A lot of it is you're going to learn about the market. A lot of times there are different products out there to learn about that you didn't maybe not know about, or services or ways to manage risk and so forth. So it really never, there's no like a course where you're complete, right? It's not how it works. It's not like, well, I think some people will tell me what to read or what to look at and I'm done and I'm complete, but it's ongoing, right? It's just continuous. And think of it, even a chess player where your moves, are still somewhat limited, right, by the board and stuff like that, is continuously training and going over different moves and different, they're always learning, like a coach for a football team, always learning, always trying to, improve. And that's how trading is. So there's no like complete this course and now you're done and it's over.
Well, Lawrence had a question, and then there's another question that showed up from I think it's Eduardo on the Zoom. But Lauren asks, first he says, Dimitri hits the nail on the head every time. Thanks so much. The question he asks, do I need to have a directional view to trade an option strategy, or is finding the theoretical edges and win rate first and then acting on them more important? And I just wanted to tie it with another question. Well, actually, it was a comment from Eduardo who said, before earnings, MC had given off a 900 call recommendation. And it's not a recommendation, right? These are trade cards that are on the site. On Tesla, that would have made me tons of money. But my gut was that it was too high, but MC was correct at the time and missed that one. Just in my opinion, reading both those things, they're kind of, two in the same, is you have to have you have to make the analysis. Do I think it's a directional move? Do I think it's going to sit still? Do I think it's, you have to be careful in your decision process. And just because the win rate and the theoretical edge was good in this Tesla trade that Eduardo's talking about,
Yeah.
doesn't mean he wasn't ready to put that trade on, right? He felt there was too much risk, even though there was
Right.
edge in it
Right.
and not. So you have to make, in my opinion, I just
Right.
wanted to hear yours relative to those two questions. You have to make the decision whether this is a position I want to put on. Is it direct? Do you think it's going to sit still? Do you think it's going to move higher? Are you willing to take the risk? And what is that piece of the risk relative to your overall portfolio? But
Exactly.
anyways,
Right.
that was the question in the two questions, actually.
It's a risk, and that's why I say you trade for break even, where you're saying you're going to do small trades to see how it works out, and you start increasing, and you'll see from experience, the more you trade, the more you'll start increasing. And I know what you're talking about. I didn't do these, but Tesla, the trade cards have been popping up, with long call opportunities. Basically, it's just reading the behavior of the stock, and it's a statistical analysis, right? It's not really, this is not my opinion on Tesla's fundamentals, right? That's not what's going on here. It's
definitely, it's not a
crunching.
recommendation either.
It's a mathematical, statistical outcome based on what's going on, right? And then you have to kind of take into other things account. So again, it's like, is it appropriate to use it at this time? Do I want to follow this? And just like, kind of like, the example I was giving you is like, okay, even if you have a quarterback sneak that worked 10 out of 10 times, well, should I use it right now? Is it appropriate to use it, or and is it going to always work? Maybe not. Maybe it doesn't work on every team. So you still have to, everything is still going to be uncertainty, right? Because we're dealing with uncertain income, uncertain outcomes, but you're trying to use data to help guide that decision and do handicap it in a way that over time, you should do better than have, I guess, more profits than losses, right? If you're tweaking and doing it and over time, doing the adjustments. It's not guaranteed, but of course, that's how we use data, to get us really to, guide us in a better path. At least it's a data driven.
Very cool. Well, so right against the opening bell. Unfortunately, Jay asked another question today. We'll try to get to it tomorrow, Jay, relative to edge, win rate, and looking at the technicals, if there's a screener for that. And also someone, we need another question to answer today. Someone was asking about using MC to find which, how'd they phrase it? They're looking to find which sectors are trending, how the sectors have been trending, if there's a way to do that. So maybe tomorrow we can hit those two things.
Yeah, definitely. All right. Well, everyone, thank you for joining. Thank you for the questions. That's been great. Hopefully you guys got something, or a lot out of it today. And stay safe out there. Have a good trading day, and hope to see you guys.